Alright, so guys, how's it going? Welcome to a brand new video. So in this video I want to show you guys a very simple 1 minute trading strategy. I'm using an indicator called supply demand zone. So all you have to do is come to this indicator section here and search for supply demand zone. The zone is in all caps. So once you add that to your charts, you can just play around with the settings. So let me show you guys what my settings looks like. So this, as you can see, my bullish candlesticks is colored in blue, and my bearish candlestick is obviously colored in yellow colors. So when I spot consecutive candlestick moving to the upside in the color of blue, and I would know that this is a strong demand zone, like consecutive blue candlestick to the upside. I want to show you guys what this setup is and how it works. So all you have to do is spot the Asian range. I have an indicator that I use that helps me find the Asian range, but that is going to be for another day. So this is the highest points price got to during the Asian session. This is the highs. So during London Open around 8 a.m, as you can see, this is 8 in the morning. Let me mark that out real quick. So this is around 8 around here. So this is 8 a.m. in the morning, London Open. So once we spot price break above that Asian range high, so you can see this is the Asian range high we marked out. This is the highs. This is the highest points. Let me take this out. So this is the highest point price got to during the Asian session. All right, this is the highest point. So once we spot that, all right, so price broke above the Asian range on the 1 minute time frame. As you can see, this is Euro USD. We spot the breakout, and when we see this breakout, there's something we need to see. We need to see a retracement. All right, we need to see price retracing back to, like, retracing back below into the Asian range. So price closed above. You can see this kind of stick. Let me zoom in a little bit so you guys can see it clearly. So you can see price closed above the Asian range, and right after that price came crashing back down. So this is a valid setup. Although there's a way I taught my students to take trades like this. They can, you can take a trade of this this order block candlesticks using the body, using only the bodies as your entry. For a more conservative entry, like to make your stop loss a little bit bigger, then you can use the wicks for the order block, something like this. But the way I love to use it the most is just to use the bodies of the order block candlesticks. So you can see, this is the first style of entry. I will show you guys multiple styles of entry with this strategy. All I want you to do is go back test it, and come up with your own theory of using the strategy. So I'll be making more videos, live videos trading with this strategy very soon. So you guys should subscribe, stay tuned, drop a like, and drop a comment if you want to see that video. Guys, once you see price retrace back into that Asian session range, and for some reason if there's an order block candlestick here, then you can take a trade. But sometimes I would just suggest do not take a trade here. Wait for price to close above the highest point price got to during that Asian session range breakout, which is this candlestick. So you could have entered at this point, which is based on hindsight, you can see that this was a winning trade. But the way I like to trade, I wouldn't have taken this trade. Instead, if I'm going to risk 1% on every setup, what I will do is on this setup I'll risk 0.25%. Then I'll wait for price to break above the 0.25%. Then I'll wait for price to break above these highs. So once price breaks above this high, then I will be looking for a retracement back. All right, I'll be looking for a retracement back into this order block zone. So as you can see, price did not, all right, so price did not come back to this order block here. As you can see, price almost did. It almost, like this, it almost did, but it didn't. So guys, the only time I like to use the body of this candlestick to take my entries is on the first retracement, on the first entry, all right, on that 0.25. When it comes to taking trades from the breakout of the Asian session breakout highs, like the highest point of this candlestick that broke out during the Asian session, that broke the Asian session highs, sorry for that mistake, So the candlestick that broke the Asian session high, once price takes that highs, which is this highest point here, I will be looking to take my entry with the wicks of this other block candlestick. All right, so even my stop loss too is going to be with the wicks. So I know that's going to be a little bit big of an entry and a stop loss, but you know, to me this is the best entry for me. Like, this is the way I love to take my entries on this setup. So so as you can see, you know, you can potentially have like multiple setups on just, you know, one trade. So let me show you guys real quick what this is all about. So all right, so let's see, you know, your first entry is down here and your stop loss is somewhere down here. So you can see on just, you know, two setups, on just two entries, you could potentially make like serious cash. So this second entry, you know, they all went for, like, let's say they went for like this one went for a 4.79 to 1, this one went for a 3.05 to 1. So you can just do the maths. You know, this second entry is definitely going to be a 0.75% risk, because we already used 0.25% risk on this one. Then on this second entry is going to be 0.75%. Or I have one particular student that just does 0.5% here and 0.5% on the second entry. But because I am more comfortable with with the risk on this second entry, I like to use a smaller risk on the first entry, which is this one, which is 0.25, and I like to use a 0.75% on the second entry. But if you want to, you can use 0.5 and 0.5 here. So that's approximately 1% risk. So, you know, 1% risk, and you know, if you're making 4 points, like I said, you make 4R here and you make 3R here. So 2.5 times 4 is 1R. 0.75 times 3 is around, you know, 0.25 or so. So as you can see, that was a beautiful trade. In total, you can look at this trade and say that, right, this is like a 3-point-something% gain on just this one trade, which is pretty damn interesting. So, you know, if, like, guys, you know, if there's any other way like you figured out to use this strategy with, you know, this is just my own concept of using this strategy, and I want to be making more live videos on this channel, you know, showing you guys my live trades. Even if it's not on a live stream, you know, I can just take a trade and show you guys my entry, my stop loss, and all this good stuff. Alright, so please do not forget to observe proper risk management. Do not risk more than you can afford to lose. Always have a stop loss, guys. As you can see, all my setups, all my trade, all my strategies, I always come up with the stop loss before I ever go for the take profit. All right, so when I get my entry, I'm always looking for where my stop loss is going to be. I am always looking for the exit point. All right, so it's not safe, it's not even advisable, it's not recommended in any way, shape, or form that you can take a trade without having a stop loss. A stop loss is, you know, the life percentage of every trader. Is what keeps us safe in the market, and you know, help us to take those small losses and come back and take those big wins and be profitable overall. So guys, if you enjoyed this video, please make sure to drop a like, and yeah, I think that's all for this video.